The Morgan Report with David Morgan.
David Morgan with you from themorganreport.com with the weekly perspective for the week ending July 17, 2020. Well, first up is Reuters, well known, and the headline is Global Debt Hits Record High of 331% of GDP in first quarter. Global debt surged a record $258 trillion in the first quarter of 2020 as economies around the world shut down due to contain the coronavirus pandemic, and debt levels are continuing to rise, the Institute for International Finance said Thursday in a report. You can read the rest of the article. Obviously, we're all well aware of this, and there's kind of an argument going between those that think we're going to get a V-shaped recovery and bounce back. Things are going more toward the old normal, and then the other side, which I am on, that says this is a historic situation and we're probably in an event that's going to see lower living standards across the board. Next up, an article from Jan, and I forget his nom de plume, and I won't butcher his last name. I've known for a long time, but Europe has been preparing a global gold standard since the 1970s. Research reveals that European central banks have prepared a new international gold standard. Since the 1970s, policies that paved the way for an equitable and durable money system have gradually been implemented. So this is quite an excellent article for everyone to look at and read over the weekend. Talks about the rise and fall of the Bretton Woods system. Also shows you where we are in dollar volume versus gold. He talks about the London Gold Pool members. And as always, Jan has a knack really for going a deep dive into these topics. So anyone that's really involved with the gold market, this is a long read, but well worth it. I would highly recommend that you take the time to read it, maybe even study it, meaning read it a couple times. Here's one I've been harping on for quite some time. In fact, I would say I was one of the earlier to broadcast the fact that food was going to become a major issue in the coming months and years. From World News, I never thought it would have to come here. Crisis drives French to food banks. Natalia, 34, had a good job in a Paris bakery, but when the coronavirus lockdown forced it to shut, she was furloughed. With loans to pay and a family of 4 to support, she found herself where she thought she'd never wind up, the food bank. This is a personal interest story combined with a major issue, and I just wanted to point it out that it's across the board, folks. This is not just in one particular country or one particular place. This is going to affect people currently as I'm talking, and it's going to continue in my view. Turning to energy, this is from oilprice.com. I usually spend at least one day a week on their website. This one's an interesting article. The biofuel boom was doomed from the start. If you read the article, you'll find out the amount of avgas that's used in 2020 is 0.1%. And you can read why this is the situation. Some of these ideas sound good on paper, but in practical terms, they're really not worth any merit whatsoever. Continuing on the oil theme, again from oilprice.com, largest California oil driller files for bankruptcy. California Resources, the largest oil driller in the state, has filed for Chapter 11 bankruptcy protection, becoming the latest casualty of an oil price crash that coincided with the coronavirus pandemic that wiped out as much as 20 million ppd of demand in April alone. In the press release, the company said it had agreed to restructuring plan with most of its shareholders, which will see its debt pile significantly reduced by about $5 billion, enabling the company to operate safely through the current downturn in commodity prices and establishing a solid financial foundation to enhance future value creation. Time will tell. Oil has certainly come up from the negative $40. We're about positive that amount right now. And I think it'll stabilize over time, but depending on what the supply chains are doing and how things are going to continue over the next several months will really be a factor that we all need to be aware of. While remaining on the energy sector, I thought I'd put this one up, and ARS Technica. Solar panel recycling has a long ways to go, and Silicon Valley may be the key. An interesting article. I suggest those that are looking at renewables take a look. It talks about the fact that renewables aren't that renewable. First paragraph, you find that what most of us know, it's maybe 20, 30 years at best is what a solar panel is good for, and then it has to go to the trash bin or be recycled. And then this article, of course, goes through what has to happen if it's going to be recycled efficiently. It talks about recycling is everything and the process that's involved. What's interesting is that a lot of these technologies that are purportedly green really aren't when you examine the total energy required to produce them and what the energy return on energy invested is. So although I think all of us would like to see more energy per capita, the more energy per capita anyone has, any nation state, any individual has, the higher your lifestyle. But the push toward green is, I'm not unfavorable to it. It's just, as an engineer, I just wanted to be favorable on an efficiency standard. And solar has become much, much more efficient. I certainly admit that. But when the total picture, again, repeating energy return on energy invested is taken into the equation, there are several years for the amount of diesel, electricity, materials mined and moved, and of course the manufacturing process. When you account for all of that, and then you plot it out versus how much energy do you have to get out of a solar panel just to break even on all those processes I just vaguely went through, you'll make a true determination on just how green some of these energy alternatives are. Something to contemplate. Just to comment on unemployment, and of course it's not just the United States. This is from Wolf Street. 32 million people on state and federal unemployment, second highest ever, week 17 of the collapse. And this graph is, I think, important to look at as far as what the total layoff picture looks like. And it's very, very large, as you can see, going from what he calls good times to the current situation. This was written on Thursday of this week. And he breaks it down to federal and state levels. And of course, there's that number. So this is, in my view, going to be the new normal. And yes, some people will come back in the labor force, but as I said in a previous weekly perspective, a lot of these jobs in the longer term, I'm not talking next week or next month, but over the next months and years, you will see a lot of these jobs that could be incorporated with human beings being replaced by robotics. And that's a trend that will continue. So it is harsh times, and I think I mentioned on the perspective some time ago, I'm not happy to make this statement, but it was made by Elliot Janeway quite some time ago, that the next Great Depression will make the last Great Depression look like a small technical correction. Now, whether or not this turns into a 1930s type of depression or not remains to be determined. And even if it's similar, there will be parts of it that will be different. However, what I've outlined many times about the food supply, food chain, and general supply chain, the current energy situation and the way the precious metals are reacting, I do think it's time to pause and reconsider perhaps what your position was a few months back to what it might be right now and going forward. And I don't think I can finish this week without doing something from Zero Hedge. Kroger stops giving customers chains as a nationwide corn shortage develops or worsens due to, and this I'm going to just comment on, and you can take it for what it's worth. I mean, obviously we see this as a fact that these stores are refusing to give change. They want you to use plastic, not cash. I think there's a subset here. You could call me a conspiracy theorist or not. I do think it has something to do with getting people used to the idea of a cashless system. That's my take. I could be off. I'm not going to dwell on it, but that's the way I see it at the current time. So let's make a couple brief comments on the precious metals this week. One is it looks like gold is consolidating at these levels around the 1800 level. It may be a new higher trading range for a while. It remains to be determined. It had a close one of the worst, I should say worst. It was off on a weekly basis slightly from where it was. So on a weekly basis, it's starting to come off slightly. Silver is hanging in the 19 level and seems to want to hold that level. And there's a lot going on in the silver market, especially. I would recommend, if you have the time or wish to, there's 2 audio or interviews that I think is beholden to anyone that's involved in the silver market or wishes to get into it. One would be Greg Hunter's USAWatchdog.com with Craig Hemke. And listen to that interview. He goes through basically the paper chase that's been going on in the COMEX for years and years. The second one would be James Anderson. I know both these fellows quite well, actually, and consider them both friends. James Anderson of SD Bullion just did an interview. I think it broke today with SGT Report. That's SGT Report, and goes through a lot of facts regarding the silver market and projections into the future, backed up really with data. I don't think it's a wild projection. You can make your own determination, but I would say that just in this last couple of weeks, there's been more of an emphasis on silver on both the positive and on the negative side. And I'll comment one more thing and close out. It seems that there's more interesting articles that are highly negative to the silver market, which makes me very biased pro-silver, looking at why, and the why I don't know, because it gets to intent. But I suspect that the tighter the silver market gets, the more negative articles you're going to see in the mainstream mafia press than you've seen of late. Why would anyone even want to comment on silver at these levels, especially from a mainstream financial publication, unless they were worried about what's really going on? But that's my take. It's up to you to determine your own. I'll close out, as always, with there's nothing more powerful than the truth. And I want to add on to that this week that usually the truth comes out. So depending on, which politician you follow or don't bother following, which is my case, the truth of certain situations will come out. Whether someone was spying on the current president or not, the truth comes out. Whether General Flynn was actually lying or not, the truth comes out. So there's a lot that's really a mess throughout not only the elites and the political class, the corporate structure, capitalism that's really been morphed into a crony capitalism. It's who you know, not what you knew, etc. There's always hope, and the human spirit is strong. And if we stand up for truth and what's right, we certainly have the ability to chart our own course, as unimaginable as it may seem. But if you're just going to sit back and go along for the ride, you're basically going to be taken for a ride. I'll leave it there this week. Appreciate all of you. Anyone that cares to, please pass it on. We're certainly not growing as much as some of the other channels, and I'm not that concerned about it. I have a strong following of a sector that's a small sector, but as a silver market, and I do more than silver, I certainly do the precious metals and all the resources. However, right now, the Morgan Report is focused primarily on the resources of the precious metals and a few tech stocks and a uranium stock and that type of thing. Leave it there. I'll be back with you next week.
Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You will understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.